All right, we at 6:05, everyone. Uh Thank you everyone for joining us tonight. Welcome to our class. We are Prosperity Connection. My name is Robert Nelson.
Explore business lending options.
We just ask that everyone mute your mics for us and turn your cameras off. Um we will be recording the class, and we want to be sure that we keep it as confidential as possible, and we'll be sure to block out everyone's names. Also, so this class is hosted by US Bank with us, with Prosperity Connection. I have with me Elizabeth Wade with US Bank, and I also have David Staffen with US Bank. The class today is Explore Business Lending Options at US Bank. So we'll be talking about business lending today. Just give you all some housekeeping. Like I said before, we'll be recording this class, and we want to be sure that everyone has their cameras off, has their mics off. If you have a question, please refer to the chat. We'll be monitoring that and putting those questions out there. Make sure we get them answered as well. Just give you all a little bit of background on Prosperity Connection before we get started. We are a nonprofit organization that offers free financial education to St. Louis and its surrounding regions. We do this through one of two ways. We have group classes that we teach, and we go out in the community and we teach classes. We also have one-on-one financial coaches. Right now, all of our classes are virtual. So just like you got in this class, all of our other classes are the exact same way. So take advantage of the opportunity to not have to drive to go see a class. And you can do it from the comfort of your own home, or leaving work or at work, whatever your availability allows. So also with one-on-one financial coaching, we have a few coaches on staff that you can reach out to, and you can feel free to email us. If you go on our website at prosperityconnection.org, you can learn a little bit more about us getting a one-on-one financial coaching session. And our goal is just to help you achieve your financial goals, no matter what they may be, helping you walk along that journey, giving you guidance and being your coach, and also being your biggest cheerleader while doing it. So that's just a little background on us. I'm not going to spend the whole time talking because I am not from US Bank, but I'm going to give it over to the people who you all came to see. So first and foremost, I'll pass it over to Elizabeth.
Thanks, Robert, for having us. So my name is Elizabeth Wade. I'm a business banking development consultant at US Bank. I've been in banking for 23 years. I love what I do. I go out into the community and bring people over to US Bank to bank with us. And tonight with me is my business partner, David Staffen, and he's going to do most of the talking tonight and tell you guys about lending with US Bank. And so I'll turn it over to David.
Thanks, Elizabeth. Thanks, Vet and Robert. I appreciate you allowing us to join you tonight. I've been with US Bank. I started January of 2001. I left and went down to Dallas for a little while, but came back. And I enjoy working for the bank because it has the right products and tools to help a business from the very beginning when they start it, all the way through the maturity of the life of the business, and we can even help companies when they sell their business for tax planning purposes. So thanks again for having us. And Elizabeth, if we want to start going, we'll kind of see if we can get through this. We're going to talk for a while about different products and different groups, and then we'll have a question and answer session at the end if there's any questions that may come up. So just so you know, it's been a super busy week. A lot of businesses are still applying for that payroll protection program, and it's been hectic. So this is kind of a break, and I'm glad to be here and talk to you guys about normal banking stuff. So Elizabeth, I can't see the slide if you don't. I just see your name, so I'm not sure if everybody else is seeing that or not.
Yeah, I don't see the slide either.
Hang on one second here. All I see is the presentation. So gotta love technology. Bear with me a minute. Yvette, Robert, do you have any tips for me?
So are you still sharing your screen? Go back to the
I
Zoom application.
the only thing I see is the presentation.
Okay, if you hit escape, it should pull out of that.
Okay.
And then you see the Zoom application at the bottom of the taskbar.
Yes.
And if you click that, I think at some point it stops sharing screens. Or stop sharing your screen. So if you go back to Zoom and then click share screen, it should allow you to do that and go back to the presentation.
Sorry, I knew we were going to have this problem. Me and technology doesn't work.
It's okay. We're going to make it happen.
Robert, I'm going to send it to you because this might be easier.
Okay. So if you're like, we can do that and I can work the slides.
Sorry, everybody.
Have a little technical difficulty here.
All right, Robert, I just sent it to you.
All right, awesome. Literally, yes, ma'am.
All right.
All right, here we go. Can you all see my screen?
Yeah, I can see it.
Yes.
Okay, so if you want to go to the next slide, it's just kind of an overview of what I'd like to discuss tonight or talk about, and hopefully it's useful to everybody on the call. As I mentioned in my opening, one of the things that I liked about US Bank, and I've left and went down to Texas and have come back, but it seems like we have the tools to help businesses from the very beginning of their life all the way through. And the things that I was going to discuss tonight is establishing business credit, and then the two other groups behind that. So you may think that US Bank is a huge bank, which we are. We're top 5 bank in the country, but each of our groups is designed towards the individual customers that they serve. So we have groups that are focused on businesses that are just starting and getting going, to the mid-range business, and up to $15 million in sales. And then we have our commercial banking group that will handle Fortune 500 companies. But whenever you're working with a bank and it's specialized in the segments that we work with, the product sets that we have are designed to meet that customer's needs. So that is, that's truly a way to help a company grow from starting to they become a publicly traded company, possibly. So if you want to go to the next slide, Robert. So how do we do this? The slide states work together to find the right options backed by the strength and stability of US Bank. So as you're talking to your financial coaches and counselors, and working to either start up your business or working on financials to maybe acquire another company or add a different product line, the conversation should happen with your banker as well. And it doesn't matter, hopefully it's a US banker, but whoever your banker is, have the same conversation with them so they are on the same page with you and can be your champion as you move forward and you start applying for different products. So we kind of sit down with our customers to find out what the request is, find out what the life stage is of the company. Is it a startup? Has it been around for a few years? Is it a mature company and starting to decline a little bit and maybe wanting to sell? Find out a little bit about the project and what size it is so we make sure that the right people from the bank are involved in the project that have the right experience and technical knowledge to help them through that process. If you're buying anything from equipment to real estate and things like that, we want to use that information to kind of match you up with the right product. There's not really a one size fits all product at the bank. We try to tailor them for the customer's needs, anywhere from, and we look at it like, how long is it going to take to pay this item off if you move through and make a purchase? So if it's a short-term need, like a car purchase, we're not going to use a product that is designed to be paid off in 1 year, like a credit card or line of credit. And then on real estate, we're going to match it to a commercial term loan that can be amortized over a 25-year period that will give you the right payment amount for you to succeed in making those payments. So do you want to go to the next slide, Robert? So one of the first things I talked about is establishing credit. And the reason I bring that up is everyone has if you're a new business, you have a credit score out there. That's kind of what we use for newer business to determine, if we can lend to you or open up lines of credits. But the business, if it's a newer business, doesn't have any type of credit. So a credit card will help establish, credit in the business name. So you have the credit bureaus personally. For businesses, there's Dun & Bradstreet, and there's one or two credit bureaus that are doing it now. But same with personal credit, the business credit established, and you can see how long it's out there by opening up a credit card to start with. The nice thing about a business credit card is it establishes the credit in the business name, but it does not reflect on your personal credit bureau. So we try to protect your personal credit bureau in that way. So if you have a balance on a business credit card, it won't show on your personal credit, even if it's maxed out. So that's a way to kind of separate the two, you individually and the business in the financial world. So this particular card, I just used this one to give you an idea. We have a whole range of business credit cards depending on what your need is. But this particular card has a low interest rate. It's not really a rewards card. But for new companies, one of the nice things about opening this card is it gives you 0% for 15 to 18 months. So if you're making a purchase and you want to extend or use that card to do that, you can do it at a very at no interest paid on it. So, but keep in mind for credit cards and lines of credit, any purchases made on them, ideally you want to pay them off in 30 days. But if you're getting 0%, you can go a little bit longer on that. But they're just there to help you through your monthly cash flow. So if you want to go to the next slide, Robert.
One other thing I would add on real quick as well is that at US Bank, the business credit card is not going to reflect on your personal credit, whereas at other banks, it is going to reflect on your personal credit as well as the business credit. So that's something when comparing banks and looking for that business relationship, at US Bank, it's not going to reflect on your personal credit. So that's something to keep in mind when comparing and shopping banks.
Okay, so the next slide is a disclosure. So anytime we have product information on there, we're required to make sure that you understand that the rates on that particular card on credit cards and lines of credit, they're variable rates, so the APRs can change. So just I won't discuss it any further, but that's just for your information. So you can go ahead to the next slide. All right, so besides the credit card, there's a few other products. And we'll jump back and forth between credit limits or credit cards, lines of credits, term loans, equipment financing. And that's when we make a recommendation to any business, we're trying to determine what their need is and then match them up with one of the products that we have that will best fit the scenario. So loans are typically used if it's going to be repaid over a longer period of time. For instance, a car, everyone is familiar with those, but they're not paid off in a year. They're typically, 5 years, and nowadays they're, 6-7 years as well. So on our loans, we typically will do loans in amounts of $5,000 to $250,000. There is SBA financing available if needed. On some products, you can go up to 84 months. It just depends on the amount you're borrowing. It can be used to buy new or used equipment, cars, furniture and fixture and equipment. And then some products you can buy multiple pieces of equipment and add it all onto one loan type product. So that's key to understanding for a business. These are fixed costs. So when you do a loan, you know where your fixed cost is each month. So you have to, if the payment's $500, you're going to have to make enough money to pay for that payment, and then as well as the other expenses. The other costs are variable costs, and those will fluctuate. Say if you're in the food industry, that will be equal to the amount of meals that you serve. So that I'm just bringing that up. I'm sure you're aware of that, but if you want to go to the next slide, Robert.
Also, David, we had a question in the chat.
Okay.
So the question says, as a small business customer of US Bank, what is the best option for startup with personal credit challenges, but strong business credit?
The personal credit is key. Those are, SBA guidelines that we have to follow. So if it's underneath the SBA guidelines, then we don't have a lot of control over it. So US Banks probably has a little higher guideline. I think the minimum score on normal products that are not SBA guaranteed is about 680. Below SBA will typically go down to, I believe it's 620. So it's for startups that if the personal credit bureau is below the acceptable scores, then we have to try to put them in touch with someone who could help repair the credit score. So I hope that answers the question. You want to go to the next slide?
Yes. Let's see. So I have one that says, what are the guidelines? I'm assuming it's like the guidelines for SBA. And then another says, are those the same requirements for business credit cards as well? And I'll go to the next one.
On the credit score. So the business credit card will not be SBA guaranteed. So it's going to rely, mainly first on personal credit score, and then on business credit scores. And I guess we probably have some flexibility in that, but typically 680 is going to be the minimum score on that type of product. Other products, it just depends on. So if you look at the credit cards, they're unsecured debt for the most part. We have flexibility, a little more flexibility when it's secured with an asset such as a vehicle or real estate. All right, that's just a disclosure. You want to go to the next one?
There we go.
So through the conversations we have with you, we try to customize strategies for your business. This slide is talking about a business line of credit, and it is like a credit card, but generally has a little better terms on it. We have a couple groups within the bank, and they offer a little different product set. But the nice thing about a line of credit is it's really intended for people who are working and they do a service or they do business with a company or an individual, and they give them credit terms, and those are called accounts receivable. So say you did a job, you bill the customer is going to pay you in 30 days for that job, whatever it is. So you would then enter in an accounts receivable that customer or that company owes you whatever, say it's $10,000. You are not going to have that money for 30 days when they pay you. A line of credit is designed to allow you to have money while you're waiting on that customer to pay you. It also helps during, like if you're a seasonal business and you do majority of your work during the summer, winter's slow, so a line of credit will help you get through the winter and bridge that gap until the season starts again for you to start making money. And a lot of times it's used for purchase of inventory, even if say it's you need flour or something in a bakery before you make your product. It helps do that, and then when you make it and sell it, you repay back the line of credit. And then finally, so it's designed to help support growth, because as you're growing your business and you're doing more and more work, it gets harder to fund the next going project, even if it's just buying raw material or inventory to complete the project. So and lines of credits can start at $1 amount, and as you grow, it can continue to grow with the company as well. All right, if you want to go to the next one. So we've talked about lines of credit, we talked about credit cards. The other one I really like to talk about is the term loans. So term loans are flexible. They can be used to purchase equipment, business expansions, and even consolidate debt. The consolidation of debt generally has to be business debt though. Anything, business credit cards can be put on there. Term loans that you have out that you may be able to get a better rate on, but not personal products. So if you start your business with a personal credit card and you want to consolidate that over to a business term loan, typically, unless you can prove that all the purchases made on that personal credit card were business related, it's very hard to consolidate that particular type of scenario. So, all right, if you want to go to the next one, Robert, thank you. So we have a lot of different specialties, banking, like any other business. There's so many different avenues that you can go down. Even just our treasury management products, those are cash flow tools to help companies run their business. There's over 1,800 products in that particular area. This is more on financing. So we can talk a little bit about the different specialty groups that US Bank that we use to help customers with that are generally a little a better product to use, or a little simpler product to use. So do you want to go to the next slide, Robert? So we have a group, it's called Equipment Finance, and it's a hybrid of a leasing program. Years ago, it was a straight leasing program, but now it's called Equipment Finance, and it has the perks that are similar to a lease program. So, for instance, the fast credit decisions, it's a completely scored product. The one caveat is the business has to been established for over 2 years. But other than that, as long as it's in not a super high risk industry, which they're different compared to loans, but it gives us like a 4-hour turnaround time on approvals, and we can fund the next day. The rates are very good. It allows for 125% of financing. So where that comes in handy, say you're buying a new computer system or servers, and they cost you $20,000, but it's gonna cost another $5,000 for someone to come in and set it up and possibly train people on it. You can borrow another $5,000 to pay for that, and it's all in one loan. The other thing is it's collateralized not by all business assets. It's just collateralized by that piece of equipment that you're buying. And then the multiple means, if you're buying, say, a phone system, a computer system, and some office furniture, you could put all of those items onto one loan. So it kind of makes it easier, because on a traditional loan, it's typically a loan for one item at a time. So a lot of people do like that, and they're only making one payment, since there's more on the loan, the rates are typically better. Do you want to go to the next one, Robert? So this lists some of the benefits, and I probably touched on them already. But working capital, that's key for any business. So if you're working with a lender who requires that you put 20 or 30% down on a purchase, it takes that money out of your pocket to do other things with. That's the nice thing about the 100% and the 25% on additional soft costs. The other key part I want to mention on here is the flexible payment structure. So if you are a seasonal business and you're slow a few months out of the year, and you tell us that up front, we can make it so there's no payments or just small payments during that time frame to kind of match up with your cash flow. So, and I already touched on the finance multiple pieces of equipment earlier. So you want to go to the next slide there, Robert? So this is this is a real benefit to people who are either acquiring a new business, they're buying larger pieces of equipment, or real estate. This is a go-to program for us. We typically will provide this for a company who is looking at a larger purchase. We'll usually give them a side-by-side comparison of conventional financing versus SBA. But it helps in a number of ways. It helps for startups. It helps if you're using projections. For larger loans, it gives you a longer amortization, which will lower your payment amounts. And the main thing on real estate, it allows for a lower down payment. So on a real estate purchase, if you're buying a $1 million property, normal conventional financing requires you put down 20% or 200,000. Through the SBA program, you can put down 10%. So it cuts your down payment in half. So I kind of like this, especially on buildings or big pieces of equipment. It really helps people achieve their goals without having to put down a lot of money. So this just kind of highlights some of the things that I said: lower down payments, longer fully amortized loans, meaning for some loans you have a balloon. You typically don't on this on an SBA, so it can go on real estate 25 years, and you're not going to have a balloon payment. You just make your regular payments, unlike a conventional commercial loan. So that helps improve the cash cycle management. All right, one of the things I wanted to touch on, I mean, you look at different banks and how big they are. I know US Bank is a pretty large bank, but it feels like, you know, St. Louis is a major hub for us. And I mean, we've been around for a long time. I know we switched to US Bank from First Star around 2003-4 timeframe. But you know, our predecessor banks like Mercantile were around a lot longer than that. But I'm just kind of happy how much money that we put back into the community. So I mean, and this gives a breakdown of the St. Louis area, of the number of customers, number of business customers we work with, and then how we invest in the community. I mean, we do add back and give back a lot to the community for different programs. And one of them I tried this year, I went to the zoo for the zoo lights, and I can't believe it. I've been here for a long time, and it's the first time I ever went and saw that. And it was really, really, really cool. And I was glad that US Bank was sponsoring that to help put that on. So you want to go ahead to the next one? I think it's just our contact information. So Elizabeth is generally the main contact for questions, and Michelle and I will help her if we're needed. And she handles a lot, but on larger products, Michelle or I would help her through that and work with businesses to kind of understand their needs and then present the product or that best fits their needs. So I think this one, there's questions. I mean, I know we had a couple, but if there's any more, some of it we can cover here. If we need to go offline with any of them, we're certainly happy to do that. Especially we have a lot of knowledge, but sometimes we have to kind of research some things too as well.
So if anybody has any questions, you can unmute and ask them, or either you can put it in the chat, either way.
Hi, my name is Anna Jarman, and I have a question. What do you guys consider high-risk business opportunities or endeavors?
Well, so it really depends on how long the company's been in business. So if the company's been in business over 2 years, and they're buying equipment or vehicles and things like that, there's not a lot of them. Sometimes larger trucking companies will fall into that, and that's I mean there's ways to get around that, but that's what we look at for businesses over 2 years. Businesses less than 2 years, or sometimes less than 5 years, are things like gas stations, golf courses. Elizabeth, can you name some others? Those are the two that are coming to the top of my head. Oh, restaurants. Restaurants
is the big one.
Yeah, restaurants are generally considered a little higher risk until they make it 5 years. There's just a high closeout percentages on them.
Car dealerships.
I'm sorry, Ann, does that answer your question?
Yes, it does. Thank you so much.
You're welcome.
We have a question in the chat. Wait, where'd it go? I lost it. It was asking if secured business cards. Do you guys offer? Does U.S. Bank offer secure business credit cards as well? I'm not sure if you answered that already. I just noticed.
I did. It's
Okay.
only personal. We only offer personal secured credit cards.
Okay. And
Depending on the size they need, I mean, we do have secured lines of credit that can be secured with a CD. It's not a credit card, but it's another way around. It's a way around that. They do have card access.
This was to build credit, David.
Okay.
Awesome. Did anybody else have any other questions for today?
I have another one. So do you guys have any pro tips or anything that would be able to help an entrepreneur be prepared pertaining to what the business structure needs to look like and what the financial picture needs to look like in order to be like taken serious when applying for or getting these products?
So do you, on the structure piece, are you meaning the formation of the company?
Yeah, like the financial structure. What does that need to look like? What numbers are you looking for?
Well, it really depends, but a rule of thumb that we use a lot is 20% for lines of credits and sometimes on term loans. So if you came to me and you said that you made $100,000 or you had $100,000 in gross revenues last year, and you were looking for a line of credit to help you grow your business further, one of the first things we kind of look at is 20% of that 100,000. So we would, I mean, that would equate to about $20,000 line of credit. So that's one thing. The other items that we look at is, depending on how long you've been in business, is what type of business. Right now, we're trying to figure out how your business would be affected by COVID, and have a conversation with you about how you're doing through COVID. Are you being shut down? Are you losing business because of COVID? And then we look at credit scores and business credit scores. So that's typically on some of the products that we talked about tonight. Those are the things that we'll look at: time in business, business and personal credit scores, what type of industry you're in, just to rate how risky or if there's no risk at all in the business. So like things like retailers are typically a lower risk category for us. At least they were before COVID. Now retailers, we have to talk to them to understand what impact COVID has had on their sales due to possible lower traffic through their business. Does that help?
Yes, it's just helping me set out a timeline pertaining to how I want to go about structuring my business. That's what I was trying to get at.
Okay. And if you ever want to take a look, I know you have some great coaches there. We have on our website, usbank.com. If you go to the business tab and go to the bottom of the page, there's some different ideas for startup businesses and things to do. So that might be helpful as well.
And I was also going to say, if you're not too sure, I'm actually going to plug Robert here, so get prepared, Robert. But and you want to talk to one of our coaches, Robert is our the coach, our business coach at Prosperity Connection. So he can definitely help you get to maybe a point A or B or C that you're trying to, and you're having a hard time trying to just get across that finish line. So I would give Robert a call. Yep, get him in your work, Robert.
I will be sure to put my information in the chat for you all.
I do have a question. This is Toby. I was the one that was in the chat asking about the building the credit with US Bank. In regards to when it's actually time to apply, what bureaus does US Bank look at when you're pulling personal credit as well as the business credit?
Well, the business credit is usually done in Bradstreet, and Elizabeth, I'm not sure on the personal. I think it's Equifax, but I'm not 100% sure on that.
Equifax is the most common we use, but we will pull from all three, but Equifax tends to be the most popular one. But we can use all three of them.
Do you guys kind of favor one over the other? Because usually, those scores are usually kind of different. If I'm kind of striving right now to get to this 680 so that I can start looking at building this business credit with our bank, am I looking, is this going to be an overall kind of a, how can I say, not a collective, but an average of all three? Yes. Thank you, David.
Yeah, so ours is a random pull, but the one that's most commonly pulled is Equifax. But it is random. It is random. But the one that's most commonly pulled is Equifax.
Okay, perfect. We definitely have the Duns and Bradstreet kind of steady, so we know what we need to work on for the personal credit. I appreciate the information, you guys. Thank you so much.
Absolutely. Any other questions?
I also wanted to add to that for Toby, and this is personal. So just remember, anytime lenders are looking at things and they do pull from all three credit bureaus, the majority of the time they're going to look at that middle score, just FYI. And sometimes it doesn't matter which bureau it's from. So you can take that, throw it out, keep it. Yeah. So I'm just giving you an idea. So,
No, it helps. It helps. It's just, as a startup, we're using a lot of our personal credit right now, and that is definitely, decreasing our credit utilization. So, we know what we need to do now to kind of get that back up so we can, be a little bit more strong fit for when we apply for some products with the bank.
Awesome. I have someone with the raised hand. I don't know if that's accident or is there's a question, but
Yes, I have a question. Can you hear me?
yes, ma'am.
I had a quick question. I wasn't able to, I was in and out of the Zoom. So my question was, I already have a business, but it's not all the way established. I wanted to know, should I start me a business account before I try to get the line of credit?
Yeah, it's typically the line of credit and the business account go hand in hand, because you need the checking account to kind of move the funds into to use them.
Okay.
And believe it or not, for us, we look at that. If you have a business account with us, we'll look at it to make sure it's been handled correctly. I think if a business account has over 6 overdrafts or something like that, it starts looking, I mean, it looks negatively on you. But if it's been open and handled, they call it handled as agreed, then that's a plus.
Okay, thank you.
You're welcome.
And then I also had a question about, I know you said they take the average of the 3 scores. So do they look at the Vantage score or the FICO score? Because I know there's a difference.
Elizabeth, you know that?
Country, 93% of lenders are going to be looking at the FICO score. The Vantage score is actually considered a educational score. And the difference between the two is the FICO score uses 6 months of on-time payments to help generate a credit score, where the Vantage score only uses 1 month of payment to generate a credit score. And the Vantage score actually came around because it realized that a lot of people didn't have as much credit needed to generate a score with the FICO score. So that's how the Vantage score came around. But it is considered an educational score to let people know where they are and where they need to build to make sure they stay competitive and to get to that prime score.
Thank you.
That's interesting. I'm learning something here.
Also, you all, I do want to put out there, and it's just as I noticed a lot of questions on and things on personal credit. That is something Prosperity Connection helps with as well, to get you all to a place personally that it will help positively impact your business. So that way it can help you just put your best foot forward with any situation with your business. So keep that in mind as well. Please don't be afraid to reach out to us for any credit questions, or if you want to schedule a coaching session and get your credit pulled as well.
Okay, and I have another question. Say, I know they normally like for businesses to be in business for about 2 years, but say if you had a plan and you just like, you know what, I'm fresh, I want to start a business, I want to build me maybe a gas station or a laundromat, and this is something that you want to do, how likely are you to secure funding for just a brand new startup, a brand new idea?
Well, right now, I mean, right now it's a little bit harder. But what we like, I mean, because each bank is going to be a little bit different in what they like. Just because it's not something that we do, another bank will. And they may charge you a little bit more for that service because they may deem it a little higher risk. But for us, really on startups, what we like is franchises. And the reason behind that is there's a lot of training and marketing and things like that that go on for you, even if you're a new business person, that kind of help you get ahead of the game. So for US Bank, we like franchises on some startups. So that might be
Yes.
an idea. If you can search our franchises and see if there's one that you like.
Hey, Dave, your audio
Thank you, Dave.
is kind of cutting out a little bit.
COVID, when last summer, we kind of put some restrictions in place when COVID hit last year. So right now, just a true startup, it's a little harder to get through. Those restrictions are starting to ease a little bit, but we're not completely out. I'm sure in the next few months, if more vaccines and everything come out and people are going back to their normal business, then the restrictions on certain startups will go away.
Does anyone else have any more questions?
thank you for coming.
Thank you
Thank
so
you.
much. How do we go about getting the email?
Thank you.
An email for,
Of the recording.
okay, so we're not gonna send out the recording. The recording will be on our YouTube page. So if you want to see it again, you can look us up on YouTube.
Okay, cool. Thank you.
No problem.
All right.
Thanks, everyone.
All right, thanks, everyone. We appreciate it.